What's up? Welcome to More Than Mortgage. I'm Chad Anderson. He's Zach Jones. We are in our 61st episode, and we're going to talk about the big, bad, scary Crash Bro favorite topic, mortgage delinquency. And Zach, I don't know if you know this or not, but it's all not true. It's all incorrect. Believe it or not, the media was wrong on this one.
Clickbait.
It really is, man. It really is. So I saw this posted while I was on vacation a couple of weeks ago, and I just roll my eyes at it. I just roll my eyes. And I'm going to tell you why here in just a second. But first, I asked Google. I said, "Hey, basically, are we having a mortgage crash? Are mortgage delinquencies going up?" Well, shame on these publications. All right, I'm just going to pull it up here. CoreLogic, U.S. overall delinquency rate continues to trend upward. MBA.org, mortgage delinquencies increase in the fourth quarter of 2024. Construction coverage, cities with the most mortgage delinquencies. Housing Wire, mortgage delinquencies are rising. Housing Wire, FHA mortgage delinquencies are rising quickly. Consumer Financial Protection Bureau, that's just information because they're not a news source. National Mortgage Professional, mortgage delinquencies climb in fourth quarter. Fear, 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 fear. The sky is falling. Oh my God. Go get your nuke bunker and store up 3 years of canned goods and water because the earth is crumbling. The asteroid is going to hit. I don't know if you've heard that or not. Zach, we just kind of get tired of it because you and I said, well, wait a minute. Let's go look at some actual data here. And you found something kind of interesting from the good old Federal Reserve of St. Louis.
Well, that's where it comes in. Is you got to look behind these headlines, and there's not a single one of those headlines that you read that is false. Delinquencies are rising, but the degree to which they're rising is startlingly insignificant. If I can get a little bit crazy on my adjectives, so in the last year. Let me say the reason this is important is that we've got a pressured economy. Inflation has taken its toll. Everybody's suffering under it. Credit card debt is at an all-time high. So
1.2 or 3 trillion. Yeah.
People are struggling to make their bills. And we know that. We know that this is a problem because every single one of us feels it. I went to Costco just to pick up a couple of items. I didn't even cover the bottom of my cart. And I was like, $150. And I looked at this guy behind me, and I guess he had $1,000 in his cart. I don't know, man. It was ridiculous. I felt bad for him. I felt like I was getting off cheap. So it's important. And it's also very important from a real estate perspective from the market, because if we've got a lot of foreclosures and a lot of short sales coming into the market, then that is predictable that prices are going to come down because we've got a inventory, and people are trying to get out of their house and they're trying to save themselves everything. We got fire sales going on. Yeah. So we go over to the source, the Federal Reserve of St. Louis, Fred.com, I think maybe it is.
Fred.stlouisfed.org. Yeah.
And Fred says in the last year that we have had an increase in delinquencies of 0.07%. So that is 0.07 of 1%, not 1%, not 0.7 of 1%, 0.07 of 1%. So
0.07.
It's a blip. It's not even statistically significant unless you're trying to fashion a narrative within the context of a title of an article, because delinquencies are on the rise.
And to give it context further, as far as like the fear, uncertainty, and doubt, it's one of my favorite acronyms, the FUD, is 2009 and 10, our delinquency rate as a country was around 11.5, almost 12%. We are 10x below what it was, yet people want to paint the picture of we're getting ready to recycle in what happened 16 years ago. And it's just not true. And real quick, and then you can finish up, the reason it's not true, okay? And the reason credit card debt is at an all-time high and people are just holding on for dear life is because the housing prices are still strong and you have increase in appreciation year over year on a national average of what was it, Zach? 5.5%?
It's between
Five?
5 and 6% wherever you
Yeah,
live in the United States.
correct. So think about this. If you have an asset and that thing continues to go up every year, and it has been, and you have an interest rate of 2.5, 3.5%, which one is going to get paid first if things really hit the fan? Your house, of course.
Save the house.
15, 16 years ago, people owed 300,000 on a home worth 200,000. And they finally just said, there's no reason to keep paying this. I'll never
Right.
get out of it. Take the
Right.
keys, do whatever you want to me. I'm broke. Here's the house. In today's world, that's another reason why credit card debt is high, is because people are doing everything they can to make the house payment.
Yep.
And that's why you're not going to see mortgage delinquencies and foreclosures and banks selling homes on the courthouse steps, because people have so much equity in these homes.
Yep.
The people who are also struggling right now are the ones who have all the equity and cannot get the HELOC. I've done a lot of HELOCs. A lot of people have done a lot of HELOCs, and they've done it to consolidate their debt, hit reset, and put themselves in a better position, which is great because you get rid of 25 and 30% credit cards. However, the other problem is if you don't qualify for that HELOC, then you're kind of stuck. Then you're robbing Peter to pay Paul. Then you're taking the dirty, crazy loans online to pay off credit card debt if it
Right.
gets to that point. But still, you're not giving up the house. Now, I've seen a few people sell the home to hit reset, but then they hit reset. They take their equity. They say, I'm out of the game. I cash out here. I'm going to be done with all my debt and I'm going to go buy another house. And it worked out for me. But we're not seeing foreclosures. They're not going to give the bank 200,000 in equity. So I'll let you finish, but it's a real simple math equation. You have more equity than you did 16 years ago when the market crashed.
Yep.
Therefore, you're not going to sell. You're going to make your payment and you're going to avoid a foreclosure at all costs because it's your money.
And when you look, Chad, at the number of transactions last year, I think it's just a great example. It was somewhere a little bit north of 4 million homes sold. That's a very low number. It's the lowest number that we've had in a long, long time. And so you've got to think that with all of the stuff that you just talked about, that there's a lot of individuals, families, couples who are they're doing their monthly budget at the end of the month and they're writing the checks out and it's like, well, sure don't like that credit card debt, but we're going to make the mortgage first and we'll make the minimum payments. How many people are thinking or saying to their spouse, as soon as things turn around a little bit, what do you think about selling the house? We're going to get the bigger house. It's a little bit further out to, so that all the kids have their own individual room. What do you think about, we're empty nesters. We don't need this big house. I'm so tired of cleaning. Let's just wait for things to turn around a little bit. And then we'll put a sign in the yard and we'll go. Yep. And it's very interesting what I see in my neighborhood, which is 20 houses. There have been one house went on the market, went way over market. Another house down the street went on the market. 2 weeks later, the sign's out of the yard and it's posted sold. That was a cash sale. Nobody bought that house with a mortgage loan. I can promise you, not in 2 weeks. And another house, they're doing an open house today because the sign just came out of the yard of the house next door. 3 days ago, it just disappeared. So, at least in my little microcosm, one of those transactions spurred the others to like, oh, I wonder what's going on down there. Let's see what they get. Okay, we're ready, and they're moving. And then there's another one immediately after that. And that was the last flurry that we had in my neighborhood was around 2020 when things were really cranking up. Maybe 2021, and it was the same thing. It's a small enough neighborhood where everybody's kind of leapfrogging. It's like, hey, let me know when you go under contract because I'm going to put my house on right behind you and try to piggyback off of your comps.
Yeah.
It's I just can't help but believe, Chad, that there's a lot of people who are saying, hey, when things turn around a little bit, or when, things get a little bit better, now we've gotten past the election. Well, let's see what the spring market brings. There's a lot of people that are getting ready to launch off and put a sign in the yard, or they're getting ready to buy because they're finally in a position.
Well, I think wrapping up the gist of today, don't believe the clickbait. Mortgage delinquencies are fine as far as the percentage and what you have as a country in our history. It's not 2009 again. Quit believing that. And we learned Zach lives in a high dollar district. Okay.
Nah.
That's what we can say. I just like how you.
It's more of a gossipy neighborhood. They're all talking to each other all the time.
You got one of those.
And here's a little litmus test. You go on YouTube and search real estate crash, and then look at the history of that person's videos, because they've been talking about a crash. Likely, most of these people have been talking about a crash for years, some of them for a decade or more.
Yeah.
So that's just what they're selling. They're selling.
Look,
well, prices are going like this.
A broken clock is right twice a day.
That's right.
That's it. Like it's going to happen at some point. But it's not anytime soon. It'll be years from now. All right. That'll do it. Socials up here as always: YouTube, Instagram, Facebook. Check it out as we drop the new episode, and all the others on this channel. Make sure you hit the bell, download, like, subscribe, comment, DM. Do you think there's a crash? Is that something you think's actually going to happen? Are we on the verge of it? Tell us why we're wrong. I truly, from the statistical standpoint, don't believe we are. But if you've got an opinion, we'd love to hear it. Thanks for being a part of this show. 61 episodes in, and we'll be back next week with another one. Take care. Have a good one.
See you next time.